Jobs numbers came out pretty weak today. 70,000 more lost than expected. And here's the thing. Restaurants, they're making zero. Hotels, they're making zero. It's a lot of jobs that they're going to have to get rid of. A lot of layoffs are coming. So the next couple weeks, we're going to see a lot of layoffs, big-time layoffs. But here's the thing. Those guys are coming on TV. They're telling us that right away. We're firing a lot of people. We're laying off a lot of people. A lot of people are going to be losing jobs. The market right now is up about 1%. So a lot is factored into the market. And I didn't want to call a bottom. But I'm calling a bottom now. I think we're at the bottom. I think we are at the bottom. I do think next week we're going to see some pretty crazy job numbers. A lot worse than just 70,000 over expected. You know, the expectations, so that's the thing, the expectations are going to be pretty high. Probably 500,000 jobs are expected to be lost next week. Now, I don't have the resources to really make some sort of crazy prediction like that. I just kind of go with what I'm feeling could happen, and I just trust my gut, and that has served me well my entire time as an investor. But my gut is telling me, after hearing a lot of these guys say that they're laying off a lot of their workforce, saying that they're making $0 in revenue, and looking at a lot of these restaurants be closed, a lot of jobs are going to be lost. Now, I don't think I'm the only one who knows that. I think everyone kind of knows that. Ray Dalio came out today, very influential investor, runs the biggest hedge fund in the world, said he expects $4 trillion in corporate loss. Yet the market was not very volatile today, traded down very early, and then traded up and is, up a little less than 1%. But that's nothing compared to what we've been seeing. That's nothing. That's flat. That's broken even. So that was good to see that the market, on a day where they could have been like, wow, we finally have the proof, things are getting terrible, economic data and numbers are getting bad. It's good to see that the day that people could be saying that was the day we were flat. Things just kind of stayed steady. And I saw it in some of the stocks I was buying that they were recovering nicely. And these were the stocks that I would expect to recover very, very nicely once the rebound comes. So I'm starting to think it's here. Now, another stock to look at as an indicator, at the beginning of this video, I mentioned Hilton, or hotel companies, whatever I said. Hilton stock in the last about hour of trading, big moves. But since the start of this, down about 70, 80%. So to see that big move today towards the end of the day specifically, after being down in the morning, ending the day almost 20% up, it's good to see. There's a lot of indicators that this is the bottom. And I've wanted to say, nibble on the way down, nibble on the way down, nibble on the way down. I don't want to call a bottom. I don't want to call a bottom. This could be the bottom. This is the most comfortable I've felt saying that there's a bottom. This is the one day I feel comfortable saying today is not necessarily the lowest it's going to be. Tomorrow we could be down something like we were up today, a little bit less than 1%. But I think that is over. I think that is over. The day-to-day micro movements. That's not how I invest. So I don't know if it's gonna be the technical bottom, but I think it's the bottom. So if you've been looking to buy, you could still buy. I'm not telling you not to buy. Like you're late. I don't think we're going to see the recovery for a little bit. We need to start getting some good news. So New York, a lot of cases. Italy, a lot of deaths, not as many new cases, which is good news, but a little early for that. So we need a couple more days, maybe a full week of not a largely increasing amount of new cases, and then that will be considered good news, and then the market will move on that. That's the kind of thing we're looking for. Right now, as I've said before, this is not a financial crisis. It's a biological crisis. So what we're looking for is data about the virus showing us it's getting better. That means the new case curve flattening. Right now it's kind of going like this, still going like this. We need to go like that. Once it starts going like that, we'll be good. So calling the bottom. I feel good right now. Hopefully I'm not wrong, but I don't think I'm wrong. I do think today was a good day, given that job numbers came out worse than expected, given that we know a lot of people are going to be laid off, given that the market is down 30% already, and given that we know the one thing with certainty is that this is going to end at one point, and the one thing I feel I know with certainty is that it's got a 1-year cap, so it's not like the world's going to disappear. I think this is the bottom. So might have a couple days to buy. If you're not feeling too good about it, you can probably wait. It's not like we're going to see a huge recovery, but we might get a pop in some positions some growth stocks. I expect the growth stocks, which is basically what my entire portfolio is, minus a couple holds. The growth stocks, they're going to rebound first, I think. I think the consumer names, Apple, it's kind of a growth stock still, are gonna rebound, and they'll start rebounding. But the growth stocks like CRISPR, Upwork, as soon as confidence gets injected back into the market, those prices are stupid. They're stupid. Disney, Apple, they're still pretty stupid, but they've got less potential and less growth potential than CRISPR and Upwork and Jumia. So space, Virgin Galactic. So that's the call. It's the bottom. Peace.